Good afternoon, everyone. Hey guys, this is Bruce Marshall with the market update for Wednesday, February the 9th. And happy Wednesday, everyone. We have had a kind of bizarre week after an even more bizarre week, last week or the last couple of weeks. As you know, the market has just been really all over the place with these wild, wild swings kind of intraday. There's a lot of reasons for that. We're going to talk about. I've got the S&P, or I've got the ES up on the chart here, and we'll go into that in just a second. But first, let's take a look at kind of where we've been. That'll give us kind of an idea of maybe where we might be going. Let me just minimize this. Okay, so today, this was today's price action in the black here. And we ended up on the day up 65 points on the SPX. That is a big move. 65 points, from here to here. It's strange. We were talking about this in our live trading room today, and I was saying, back not too long ago, a big move on a day was 25 points, maybe 35, something like that, big move. And now we're getting 65, 85, 100-point moves basically every day in the last, back and forth in the last several weeks. But check this out. So since yesterday's low here, let me see if I can back this up even a little bit more. Well, the low on the day yesterday, right here, that gives us about, let's see if I can do the math real quick in my head, 45.84. It gives us about a 125 point move, in that's Tuesday session, Wednesday session. This is overnight, but 125 points. I mean, that's really, really, really going a lot, very, very quickly. So let's back this out a little bit further. Again, just trying to put some perspective on the market. If we look at the ES or the SPX, which basically the same thing. This is the futures side of it. That gives us a good representation of what the overall market has done. So the crazy thing, now this is a 20, if we go back for the last 20 days, from 47.39 straight down to 42.12, that's a 500 and what about 25 point move. I mean, that is a giant, almost straight down, mini crash, I guess, best way you put it. And that is, if you look here, this is Wednesday to Wednesday, less than 3 weeks, 2.5 weeks. And then we chop. The market's trying to figure out which way it wants to go. And then we start going here again. Then we chop, trying to figure out which way to go. And look at this. We just come back up to this high that we were at prior to this a week ago. That's the last Wednesday to this Wednesday, right? So, what happens next? And if you are looking at the economic calendar, you know that CPI is reported tomorrow morning before the open. And CPI is the Consumer Price Index and measures inflation of things we use every day, car prices and rent and, gasoline and all that kind of stuff. And what is going to be in sharp focus is what that number is and how the Fed is going to react to it. So from here, if the number is a good number, maybe we keep going here. If it's a bad number, we keep going here. And when I say good or bad, it's actually if it is a what's considered to be a hot number, meaning inflation continues to tick higher, that's going to be a bad number, but it's going to be good for the market because that means the Fed might tap the brakes on, hiking interest rates or extend the time frame of doing stuff, that kind of thing. So good is bad and bad is good, essentially. And we don't know how they're going to interpret it, but that comes out tomorrow. Now, if you remember last month, actually, you know what? Last month, I believe, let me double check here. Yeah, it was right there. So last month, when the CPI last month was reported, was right there. And that's what started all this. Because when the CPI was reported last month, that number was 7%, I believe is what it was. 7.5%, 7%. That was the highest inflation number in over 40 or about 40 years. So we've got more inflation now than we've had in 40 years. So what they'll be looking at is the trend getting worse or is it getting better? In other words, so we'll know tomorrow. Then we had the Michigan on Friday. We had the Michigan preliminary inflation analysis. I guess is what you call it, the 5-year inflation numbers, and that'll be another big one. And then we won't see the Fed reaction until Monday. Actually, we'll see it in the market immediately. Probably tomorrow. But the feeling is that I'm hearing is that this is being all baked into the market right now. Everybody knows it's going to be bad. So, what's the surprise going to be if it's a bad number? If you're expecting something bad and it's bad, then there's no surprise there, right? So again, very, very difficult read to see, to say which way we might go from here, higher or lower, because we don't know what the number will be and we don't know how the market's going to interpret it. And what that, basically it's a two-step thing. What is the number, and then how will the market view the Fed's interpretation of the market? It doesn't matter what you and I think about it. It matters what the Fed says they're going to do about it, right? So all that being said, if you are trading, be ready for either this, or this. I don't know. I was going to say I'm leaning more toward the downside. I think it's a little more likely, but I really don't know, because again, is bad already baked into this or not? And the market wants to rally, but we're at a giant question mark here. So that being said, we continue. I've been doing little, scalping trades and things like that. I had pretty good luck, but I'm doing smaller size because the market's so dicey, and I'm just not doing as many trades as I normally do. And that's what I would say, is to try to sit on your hands and watch, get the popcorn out and watch this, and be careful with this market, unless you're trading futures or something like that you really like this erratic, swings and volatility and all that kind of stuff, because you can make some money, but you can also get your head chopped off very, very quickly. So be careful out there. So other than that, we continue to get on through earnings season now, and we don't have a Fed meeting this month in February. There's not one until March 16th, I believe. So not much else to look for other than the ebb and flow of the market. So again, if you're trading this, be careful, small size, tight stops, take profits when you can, that type thing. Normal stuff. I'm still in defensive mode right now in this market. It's definitely not. It's not easy to trade this market, and it's not a good market to commit a lot of capital to, because we can turn on a dime for any reason here. So again, with that being said, I hope that helps. Hope it makes sense. See what happens tomorrow and Friday. Probably give us a trend for the next week or several weeks maybe. So we'll see what happens in the morning. So thanks for the time, guys. I appreciate it, and I will talk to you at the next update. Take care.
Without simpler trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency.
It's one of the things that won me